My name is Ben Gordon. I'm the CEO and co-founder of Fractal Agriculture. In our business, I'm investing alongside farmers to help them grow and improve. I think one of the biggest indicators of success that we typically see is a great transition, or where they're at in the transition, because it's setting them up financially and just letting folks reach their full potential. And I think, just to be honest, like, there are farms who I think would be in our top 10%, who frankly I can't invest in today because their transition plan hasn't gone well. And sometimes it can be either generation. I know this isn't a new story, but I think one of the things that we see is that the stakes for transition continue to increase: more dollars, more assets transitioning, more volatility in markets. And what I think is the biggest risk in terms of more competition, as well as the risk of getting this wrong and doing nothing. So we thought we'd turn to a voice that's been doing this, is wise in this space. We won't say has been doing it for too long, but for over 30 years, Lance Woodbury has been advising farms through transition, writing on the subject matter, and advising farms directly, as well as through peer groups. Teaches at TPAP, and I would keep going on and on, but I know Lance wants to get to the real meat of it. Lance, appreciate you joining us this morning. What did I miss on the intro? What should folks know about you?
Only that that wise comment is funny, because when I first started, Ben, I used to identify with the younger or the incoming generation, and they're like, "Yeah, let's hire that consultant because he's sort of in our age range and can help us, talk to our parents and whatnot." And I realized a few years ago that now I get hired by the parents because they say, well, let's hire that consultant because he's closer to our age and he'll help us talk to our kids and whatnot. So all of a sudden I realized, oh, I'm the older guy now. I'm the older generation.
Good. Well, I guess that's one version. It's not quite failing up. It's aging up.
Aging up,
On
yeah.
that.
Falling Upward is the title of a good book, too.
Yeah.
So, yeah,
Right.
yeah.
Just for folks that, as we kick this off, please ask questions and let it fly in the Q&A throughout, so that way we can kind of let you guys guide this. It's no different than the normal. I see a lot of familiar faces, normal folks, when we are talking. But I think what we want to kick off with is just start a little bit with we'll kind of start with the stakes in the market this farm transition is occurring, a little bit of the context around it, and then get some of Lance's kind of biggest lessons, the framework that he has. And then specifically, we want to hit on our audience, which I think is probably a little bit more professionalized, a little bit more growth mindset farms, but still the same folks who acknowledge that even though they might be a little further along in some areas, like, don't necessarily have it filled out. And so there's really kind of three groups that I think of in these conversations. One is, if you're an older generation that wants that farm to have an opportunity to be competitive, not just survive, but thrive in 5, 15, 50 years, what's the view for you? If you are maybe the younger generation and maybe you're in a very competitive spot today, are you actually making the bets that you need to make and learning and kind of grabbing those reins in a way for that? Or if maybe you've just gone through a transition, how should you be thinking about it for that next generation? So let's maybe kick off, Lance, like, stakes right now for farmers when it comes to generational transition. Like, what are you seeing, big trends? What's unique now? What's just enduring? Give us the lay of the land.
Well, I think certainly there's a lot happening, particularly around the older age of just generally across the country. I mean, you've got a lot of folks that are at an age where they are transitioning with the retirement of the boomer generation. And so for farm operators, that's kind of one set of issues. And then for farmland owners, that's kind of a maybe more of an estate planning set of issues. But obviously, those two combine when you have a farm that both owns and rents farm ground. So they're dealing with transitions not only in the operational side of things, but with their better landowners, and trying to figure out, well, how do we think about capital needs for that transition with our landowners in the middle of our own transition? And does the senior generation need capital? I mean, do we need to buy out the senior generation out of the farm, or are they going to leave capital in? Is it going to be patient? Like, how do we think about that? So the demographics are driving a number of conversations at a large level. And that's before you get into just sort of where we are in the industry and some of the dynamics at play with economics and whatnot.
I mean, I know from the folks that we work with, there have been, and there's always farm retirements, and we've been talking about that for a long time. But I think And maybe it's just because it's more unique, so you hear about it more, but it seems like there are operations that are maybe saying, hey, I don't want to lose money again for 2 more years. And like I might be willing to retire a little bit earlier. And
Yeah.
there's bigger chunks, both rented and owned, coming for sale kind of at once. And it feels like if you're going to take a big swing that you need to, maybe to get to a competitive scale or whatnot, like this is a time. That seems pretty tough in the context of trying to figure out the basics at a family and a business level.
Well, that's right. And not only that, but I mean, have you really ever been to a farmer retirement party? I mean, no. I mean, a funeral is the joke that a farmer retirement party is. But so even our notion of what does retirement really mean in our world or in our business, when people's identity is hooked to the activity of farming, it's just a very challenging conversation to have. And then you have all the economic issues swirling around that, but at its root, in some ways, it's really a psychological process that we're dealing with. So it's one thing to say, hey, the economics suggest maybe I ought to not go another year. And what's that mean in terms of selling my farm or the neighbor or the up and coming operation buying my farm? But that's even, that's sort of second to the psychological process of, well, what do I do if I'm letting go of something? I mean, how do I let go of something? Like you don't only really only do that once sort of in your life as a farmer. So this process of letting go is not an easy one. And if I were to say one of the big issues that I come across time and time again is just the difficulty in letting go that the senior generation faces. If you don't have something pulling you away from the farm and it's just about letting go, it's going to be hard to make that transition work well.
And I think that that narrative resonates with a lot of experiences and a lot of things we've seen more on that. Kind of in the intro, the some of the folks that we've tried to invest in, where it maybe just wasn't a fit because they weren't positioned well.
Yeah.
Let's maybe kind of continue on that theme because I actually want to come back to maybe the folks where like the let go has happened and there's a new set of challenges
Yep.
upcoming. But maybe on that first group, what are you mentioned buying out that previous generation. I'll tell you from an investor and a capital provider, like that scares the heck out of me about a farm having to rebuy all their land and like set
Yeah.
them up for success. Like I can't imagine you're essentially a first time farmer.
Yeah. Yeah. I mean, the idea of trading capital between generations, in an industry that's so capital intensive as ours. I mean, we'd rather use that capital to go acquire more ground, not trade dollars inside the family. But agriculture again is unique. If you look at businesses outside of agriculture, oftentimes it is the senior generation selling their business to the next generation as a way to fund retirement, which also has the benefit when that capital trades hands, it helps solidify the idea of a transition. When it's just a gift from the senior generation to the younger generation, and it sort of muddies well, what's really your role here? Because you really you've given me the farm, but you're still on the farm, and what does that mean for how we interact together? So the way we often pass down farms in the business um, creates a little bit of the muddy water around transitions in a way that in other industries you don't see quite as much.
So we have a messy or a tough psychological shift that exists. Plus, you're doing all the entity work in the back end. Oh, and by the way, we're in a downturn and the industry is kind of shifting underneath us structurally in a
Right.
lot of different ways with a lot of intense competition. Oh, and by the way, in that competition, we're probably going to see half. I mean, most analysis has between 40 to 55% of land turning over in the next 10 to 15 years,
Yeah.
which means even if you are the big farm on the block, you could be mid-tier in 10 to 15 years if you don't execute right.
Yeah.
I mean, that just like sounds like a lot. Like when you're
Overwhelming.
so Lance, like, what do you say you do here when you're sitting down in that world, like with a farm? And you mentioned a few of those pitfalls. Like, what does the process look like? I mean, where does somebody even start on this? And then how do we rapidly accelerate? Because I don't think this group, looking at some of the names that are here, are really like people who are very content with the 101. Like, how do I go and like take that thing so that way? I mean, these folks like to win.
Yeah, yeah. Well, and so that is where I was headed, which is what does it look like to win? In other words, what's the definition of success that's driving you? So if I were to say the place to start for about any family is a set of guiding principles that say this is what success looks like. So is success a um, certain amount of acreage or a certain level of profit or a certain number of family members home or a certain kind of business? Culture and relationship around family members. And a lot of times it is just assumed that, well, we just get in and we're going to grow and we're going to take on the next opportunity. And really the process, the place to start is to come back and just check the assumptions with everybody and say, what does success look like for us and why that definition of success? Why is that one important to us? And just from more of the kind of the softer issue side is, what I see sometimes is people pass a farm, but they lose the family along the way. So they say, hey, this is what it looks like on the outside to be successful, but on the inside, they're falling apart. And people know that, who I'm talking about. When you look around the neighborhood and you look at families that have a lot, but they're falling apart on the inside. And the question is, does your outside goals or definition of success also meet your inside or your family definition of success? And are those two on the same page? So back to the question, I'll start with what are the guiding principles of the family? What does success look like, and why is that important to you? And I have lots of stories of people working through the succession process and saying at some point, um, we can't keep just adding more family members to the mix. At some point, this is going to divide. And so, how do we think about that division? I years ago worked with an attorney, and he said, you know, as a family, you should know how to get out of business together before you get into business together, which speaks to the buy-sell agreements and things like that. But it speaks to this vision of someday this is going to divide or come apart, or we're going to need to think about selling some assets. So for many families, selling land is anathema to who they've been. But if the right opportunity comes along and maybe you can trade land on the outskirts of an urban area to farm bigger somewhere else, maybe we ought to be thinking about that. But that all comes back to what's really our definition of success? How does the family fit into that? And then what does the business look like too?
I think when you talk about the vision and then the assumptions behind it, I think that's one area that we definitely see folks get a little tripped up because I'll see a surface, the initial response when because I don't want to invest in somebody who doesn't want a farm that's enduring.
Right.
We always ask 5, 15, 50 years. Do you have like, are you aligned on all of those time horizons? Yep. Okay, cool. Like we have potential to work together.
Yeah.
And usually we get nods, like we start getting a little bit there. And then you ask them a question like, okay, well, what do you think it'll take for your farm to be competitive and to even be able to survive at a reasonable level in 10 years? And we'll often hear, well, we need to double in size. And then we'll ask, well, what have you done to move towards that? And what do you expect to do in the next year or two? And what are you doing right now? And usually I'm standing pat.
Yeah. Yeah.
And I think as you just like pull on those assumptions, that's where the desire to the plan can be really, really tough. And that's just, in buying ground or expanding an operation. Now that's one person. How do you, I guess, what have you seen in China getting that alignment, especially between, a next gen and the current generation?
Yeah.
Yeah. I mean, what does that look like?
Yeah, I mean, ultimately that conversation it may start at the vision level, but it has to move to what's a meaningful first next step to get us there. And so many times, two things happen. One, we either articulate that vision, but then don't spend the time talking about what's the meaningful next step that gets us there. Um, the other sort of thing that can happen at times is because they're family members and because those assumptions, like we grew up together, we should know the answer to these questions. We don't have to talk about it. And by the way, we're busy farming. So what we have to have a meeting and slow down and talk about this stuff. Like that we don't have to do that. We're a family. We all know each other. We all get along. We all assume what each other's thinking. So that assumption-based model in a family sometimes gets in the way of identifying, well, what is the specific thing we need to do to make progress on becoming that enduring operation? Because the assumption is that we grew up together, we know each other, we're just automatically all on the same page. Well, that's not true usually, and it's especially not true if there are people who have gotten married and there are spouses around the periphery or even involved in the operation. They didn't grow up in that. They don't know those assumptions. They're not making the same belief, some same assumptions about what the future should look like and what a next step is to get there. So, it's hard, Ben, because if you think about the decision-making process in a family business, in a closely held company, or if you think about the decision-making process at all, we all go through a period of reflection about a decision. And then there is, in a family, there's a process of getting on the same page, what I call turning I knowledge into we knowledge. And then there's the aspect of planning. And finally, there's putting that plan into action. What happens in a family business is the bottom half of that circle, the turning I knowledge into we knowledge and the planning, get short shrift because, hey, we're family. We should know. We shouldn't have to spend a couple hours talking about what you think or what I think. Let's just see it and do it. See it and do it. And they stay at the top half of the circle between reflection and action. But you got to get in the bottom half of the circle and say, look, what do you and I both believe about the future of our farm and who's going to help us get there and how are we going to come up with the capital to get there and what's the next step to get there? And we have to move over into that planning stage. So that's what happens in family ag businesses is they shortcut that decision-making process, but it hurts them in the long run because they're really not all on the same page or haven't fully fleshed out what's it mean to say we want to be 10x where we are today in 10 years. I mean, in 10x, I know that sounds like a lot. It's really not. There was a point 5 or 10 years ago when they were 10x smaller than they are today. So 10x isn't all that. I mean, it sounds big in terms of the numbers, but in terms of where a family has come from, 10x, they were 10x smaller at some point. And so now we're just talking about what the next 10x looks like, and are we on the same page about how we're going to get there? So I feel like I'm preaching, so I'll just stop here for a second and let you jump in and ask questions.
No. I mean, I'm not gonna lie. I was sitting there, and I mean, like when we first started talking to farmers, like I was very naive, and I was like, well, what does your growth plan look like? And and in relation to the next generation, especially if you're bringing on another family, and we know that margins come down, we need to have more acres on that margin. I mean, I'm from North Dakota. Our farm size has increased drastically outside of the valley, like where my family's originally from. I mean, it's going to take 4,000, 5,000 acres just because it's low margin to live a solid lifestyle on that.
Right.
And that is something we're going to see continuously because we're in a commodity business. So unless you decommoditize or on that end of the barbell, like you're going to have to scale. And there's a real family planning dynamic in there if you want to bring in multiple people.
Yeah.
But there's also an opportunity, I think, in that, at least from some of the operations we've seen, where when you see the family come together and that next gen, they know where they are strongest, and you start having not just the transition conversations, but the how do you build a farm team conversation that includes family, that becomes a superpower. I mean, it's one of the first things we look at is like, what is your farm team from a family dynamic and then overall? And you
Yeah.
can just tell right away, are they on the same page? Are they bringing the full talent to bear? Because I think the farm that wins in, I don't know, 5 years, 10 years, I don't think it's even 10. I think it's closer to 5, looks more like a small corporation in terms of its capability, even if it's still
Right.
family owned.
Right. Is it all right if I share a slide
Yeah.
real quick here? Can you see that
Yes, sir.
slide okay? So what you're talking about there really is that professional stage of the business. And I think what we see is that in order to get to that professional stage, what you're often looking for is, do they bring the skill sets at the professional level to really inspire confidence for you all about investing in them for the long term. But where many farms started, or what many farms went through in the 80s, is that survival mode where it was sort of hand to mouth or year to year. And as they made it through survival, they got to a stable place where things looked pretty good. They had some growth in net worth. They started to add a key employee or two to the mix. But there comes this point where what got you to stable, which is being really good at doing the work, doesn't get you success at the professional level. Because at the professional level, it really is about managing other people to do the work that you loved to do. And my broader point here is if the family's not on the same page about climbing this ladder and what it takes to climb the ladder and what it takes to be a professional business, then things can sort of fall apart. Or what you get is a lot of talk, but no action. Or in some cases you say, hey, this isn't working, let's do something different. The next generation is going to go off and do their thing, or whatever it is. And that my point with this is if the family will talk about this slide, and if there's any slide that gets a lot of reactions in the talks I do, it's this one. If the family will talk about this and talk about, do we want to climb this ladder and what's it take to climb this ladder? Because taking the steps to climb to a professional and institutional level often require thinking differently about our capital structure. And how do we use capital and what are the sources of that capital and how do we think about that? Not just outside capital, but even at the professional and enduring level. I have a lot of families saying, how do we include key employees in either ownership or some proxy for ownership of the farm? So that you're trying to climb this ladder, and the real question is the family, and I would think for you all, Ben, as you look at investing in organizations, is the family on the same page about climbing this ladder and taking the steps required of each stage? Because it's not easy. I mean, this climb up this ladder is happening while the business is trying to grow. And people will sometimes say, well, we don't have to grow. Well, the reality, what happens is if you're a good farm in the stable mode, what happens is somebody near you or next to you hangs it up. And so you have this opportunity on your doorstep. And saying no to that opportunity, I mean, people only buy people will say, oh, I'm not going to buy every acre, just that which borders me. I mean, that happens. And so that when that starts to happen and you're buying that ground around you, it takes you to that professional level, sort of kicking and screaming at times. But you got to think about, hey, what do we have to do at this professional level to be effective? And then, depending on the skill set in the family and who wants to lead and their capabilities to lead, you have to cross this bridge of, do we really want to be an institutional business? And I've had family businesses look at this, Ben, and say, yeah, let's climb that ladder. And we're looking forward to it because once we've put this capital together, we're probably not ever going to put it together again if we start taking it apart. Like once you start splitting, which is the right answer for some families, but once you start splitting that capital apart, it's not going to come back together. But if you can stay together and keep the capital together, your ability to climb that ladder creates some, but you got to think creatively. You got to think about being an enterprising not just a family business, but being an enterprising family. The folks at the Family Business Consulting Group came up with that language about how do we move from being a family business to an enterprising family. And at this professional and institutional stage, that's what you got to be thinking about. Does that make sense? I mean,
yeah, I mean, it resonates. I'd probably get even a little bit more spicy in that, like I wouldn't, like, I'm not sitting in those shoes. So I'm not going to pass judgment on somebody who wants to stay at a given level. And like, those are folks those families have earned the rights to go do
and it's a perfectly moral and legal, ethical decision to stay there.
Right. But I think it's really important, especially for the next gens, that like, given the shifts in the industry, if you're just going to stand pat on both that professionalism trend and the competitiveness of the business, that farm will not be financially viable from a competitive standpoint.
Right.
And Shay Folk and I talk about often like the concept of farming your equity, where you are losing more money over a 5-year kind of rolling average than you would get if you're renting the farm.
Yeah. Right.
And I think more and more, if you're not willing to engage, and so it's these dual tracks of, is the operating entity, the competitiveness without the people, right? The boxes and just that machine, is that competitive? And then how do you make the people side work, not only to run the machine, but who also owns it, governance, control?
Yeah.
And I would almost argue that a lot of these things are becoming more and more non-negotiables. If you say that legacy, the amount of due to say is starting to really have to ratchet up
Yeah. Yeah.
across
No,
the
I
board.
think that's right. I mean, yeah, people have to, I mean, in today's environment with the capital that is required and what it takes to make money in this environment, I mean, people have to be pretty committed to operating at a really, again, efficient, uh, executable. I mean, all the sort of language really, but it's really about are we operating professionally? I mean, are we able to do that?
And so I think the next place that maybe I'd go to it is, well, I mean, I guess maybe just one more comment on like where that fits. Like when I look at folks and their desire to go up that ladder, I think I have a few farms that I can't wait to do an investment with who we're not ready on right now. But like their desire, like they already have the professionalism, they just don't have the asset base, but they're
Yeah.
figuring it out.
Yeah.
And I think I would put more money in today's world on that farmer winning than somebody who's well capitalized but doesn't know how to both run a business and doesn't have the hunger to go figure it out, given the amount of transition and shift that's
Yeah,
happening.
I think that's right. I think that's right. And some of that is because at times you have some generational capital
Yep.
that comes down without a proper appreciation for what it took to accumulate that capital. And I mean, we see it as parents with our kids, right? If they don't have to struggle, I see families where they've not made the next generation struggle at some level. And so the next generation sort of takes it for granted and really doesn't understand sort of the drive that it took to put it all together, and that's bad news in a family business. And so you got I always say to parents, like, the one thing I want you to do is make your kid struggle. Now, not struggle, I mean, there's lots of reasons kids struggle today, but I mean, go get a job, uh, get some debt, pay some bills, feel like you have to do something in order to succeed. But our human tendency, maybe our family tendency, is to make it easier for the next generation, not make it harder. But you gotta introduce that sign of struggle. And I see a lot of farms where that capital has come down from generations and it's made it somewhat easy. And they're not struggling like you say with the business that maybe doesn't have all the capital, but they are gung ho on operating professionally and finding the right mix of owned versus rented ground and that kind of thing.
Yeah, I mean, I think there's a couple versions. Actually, we just got a really good question. Like maybe give us some examples of like how to help them in a learning way. So it's not just. And this is actually kind of where I wanted to go next, which is I think there's a version of that struggle that is entitlement, and then I think there's a version of it that is capability
Hmm.
and like really developing that. And I think we work with a couple of farms that like I'm really excited about the next gen and like their capability, but I haven't seen them grasp the reins from that generation above. And this generation above is looking at the cycle we're in, and they've looked at their playbook over the last 3 or 4 cycles, and they're like, why the hell are these guys not wanting to just like go grab it? And like
Yeah,
they're just just they want it so bad. And it
yeah.
feels kind of like what Vince was bringing up. So yeah, maybe give us some examples. Like, how do you bring them into that? How do you bring them into both like the learning struggle and the opportunity and like the pain that opportunity kind of comes with you? That's that positive pain.
Yeah, I think so. So from um, the the business side of that is really including them in the financial discussions pretty early on, so that they come to understand. I mean, first of all, ag businesses in general, because of FSA and our tax opportunities and land owning versus equipment owning versus livestock owning. I mean, we've got a lot of complexity in our organizational structures, and you complicate that with selling grain over multiple years or prepaying expenses or doing things that other businesses can't really do the way we do it. And it's just hard to understand at times what is happening financially in the operation on an accrual basis to say. So I think somehow getting your kids to learn the financial 101 and the relationship of the balance sheet to the income statement and how that works in our operation where we have multiple entities and crazy ownership structures and things like that. I mean, there's a whole learning piece around that. The other learning piece around capabilities and skills, frankly, is getting them out of your family business for a while so that they are forced to learn some of those skills from other people who aren't their parents. In other words, one of the mistakes people often make in family businesses is, and I get it, they're anxious to bring the kids home right away, but making that next generation go be successful somewhere else is really key to their learning. And if they're back and didn't have that opportunity, I mean, that's part of what makes our peer groups valuable to folks, um, or trying to get people connected in some way where they can pick up that learning from another operation. Now, that other operation or that other business that they go to work in may tell them the same things you would have told them, but because it's not a family perspective telling them, it's not their parents telling them those things, it's somebody else that they're not related to or their last name doesn't mean as much to, they pick that up better. So one path of learning is to include them in the right conversations from a fairly early stage and help them understand. Another version of learning is in some ways the opposite, sort of kicking them out and saying, go learn this from someone else. I often say my biggest hope for a family is that they have a family member work somewhere else for a while and have a terrible supervisor. I want them to have the worst boss on the planet so that they understand what being a bad boss is like. Because when they come back into their family operation, they're more likely to be a good boss. And if they've never had that experience or learned, it's hard for them to appreciate what what being a bad boss does to the culture of an organization. So does that make sense? So learning by
Yeah.
inclusion and learning by exclusion in some respects, or learning outside the operation.
Yeah, I mean, I think a couple other things that we've seen along those same veins is even within peer groups, folks sending their kids for a couple of months to other operations to go do it and not just going and doing the crap work, like the office work. And like
Yep.
it's been like I've had investment calls where like there's somebody from a peer group operation
Yep.
because they open up their books so much already to each other as part of this. Is why I love seeing peer groups and we're about to invest in somebody. And it's the daughter of somebody else who we know. And I'm like, what the heck with that last name? Like, what's happening? And they're seeing the balance sheet. They're talking through decisions, and that was like the I would say a pretty extreme, pretty darn cool
Yeah.
example.
And what a great environment to have that happen in, because you know the qualities of that other farm from the experience in the peer group. And then to have your kid go over to that farm for a few months, or I've had some go for a year or two
Yep.
because that was sort of the family business employment policy was you go away for a couple of years. Well, what better opportunity than to have them go to another family that we know their values and what they're about and have our son or daughter learn in that environment.
Yeah, I think the other thing that I think we've seen that's been interesting is we ask a lot of our farms to go through kind of a an opportunity mapping exercise, which is really just a capital planning exercise over a 3 to 5 year time horizon. But we do some of that listing out of the core assumptions, and I think it's really easy to just like sit and kind of pencil whip that and do it at a high level and not push yourself, but to be able to do that with that next generation as an exercise, especially if you're able to do it with an advisor, someone like you guys,
Yeah.
even someone like us who's not going to advise, who's not going to be an advisor, but it's going to push on questions and on those assumptions,
Yeah.
but continuing to ask why on those underlying assumptions. Because I mean, I remember sitting down with a family and they did some specialty crops, they did some vegetables. And there was really a decision of like, do we want to go down whole hog essentially into the vegetable business, or do we want to kind of maintain this? It's 10% of our operation and we do a lot of corn and beans. And where does this go? And there was a pretty stark divide. And how they would invest their capital and make decisions was very, very different.
Between the generations.
But it was cool because they didn't realize it. And all of a sudden, I think they realized a lot of that friction was there. And so, even before this, the dad in this case, they were not even close to a generational transition. We were talking like 40 and 20
Yeah.
like in there, and like where it was a pretty, and they were pretty tight, and like they worked really well together. But it had been a little bit further than that, like 45 and 20.
Yeah.
And I think the coolest thing about it is I think they realized that some of the friction came from it, and like they each then were pushing. It was clear who was going to make the final decision at that point,
Sure. Sure.
but like there was just this openness of like wanting to see the challenge that I think really resonated there.
Yeah. And what's really interesting in that, I just got to say, is again, back to the families take those conversations for granted at times and assume that we're all on the same page. And what a third party does, whether it's you or whether it's me or whether it's their accountant or their wealth manager or their pastor or someone else who comes in and asks a business question is you've got the third party dynamic in there that makes people think about and answer a question differently than if their mom or dad asked it or if their brother or sister asked it. And that is so, and I mean, I don't, this isn't to promote me necessarily, but and I will just say the value of a third party asking questions in a family business is is really valuable, really important. It doesn't matter who the third party, I mean, it doesn't really matter who the third party is as long as they're asking good questions. Like it doesn't have to be a family business consultant. It doesn't have it can be a vendor, it can be an ag retailer, it can be your agronomist, it can be a crop consultant. I mean, it can be the person you trust to ask the questions of the family that get them focused to have the kinds of conversations and do the kind of planning that you're looking for when you're scoping out who's going to be a good partner for us.
Yeah. I mean, if you look at other similar size businesses, if we just say size on balance sheet basis, like they're going to have an advisor. So if you're not talking to a Lance, an AgView, somebody out there who kind of is doing that, from an outside standpoint, I'd say it's a bit of a red flag unless everything's perfect. And if you think everything's perfect, there's probably a growth mindset
Yeah, I
issue.
have a family in a peer group, and he's real fond of the quote, "If you think a good advisor is expensive, you should try the cost of a bad advisor."
I
I
might have
always
learned
laugh
that
at
one a
that.
few times being
Yeah,
a cheapo North Dakotan
yeah.
from time to time.
I just always hope I'm that good advisor. Like I hope people don't talk about, oh, he's the bad advisor, and he costs a lot.
The one other area I want to hit before I see we got a comment from Jack, and let's get it maybe with some like tangible kind of like places to look at. Is a little bit on that. If let's say there's a next gen that's come in, maybe they've even married into the family, but they are going to be like on
Yeah.
that team that's come in. It's clearly identified, and
They
they're
say we'd
great.
rather have the spouse than we would the family member we had. Like, we'll take the spouse and let the family member go.
Yeah, I mean I mean it's there's some and often it's multiple folks coming in and like that's exciting, right? Because there's more talent and there's more potential in that operation and where it's fitting in. But they didn't go through growing out of the 80s. They didn't go through a few other downturns and where it goes. And maybe I'd say like sometimes I see a little bit more risk aversion onto it because they don't know the swings that have to be taken. And they also don't know the risk management that's in place when you're taking some of those swings
Yeah.
that comes in. So maybe just kind of curious if you've had any examples there. I'm thinking of a couple operations that are both, I'd say in their area, they're both, somewhat, they're not the biggest, but like they're bigger on acreage, but I'd say they're pretty damn well run, pretty darn profitable. And like the dads in both these cases actually are trying to actively let go. And I think they want a little bit more of those reins kind of come in. Like, yeah, I'd be curious just any experience you have in those types of
Well,
situations.
I think that's the beauty of good succession planning is you take the best from the senior generation and pair it with the hopes and aspirations of the younger generation. And it doesn't have to be, although some ag operations do it this way. Hey, I'm done on this day, and it's all yours, and good luck. That that misses all of those years of wisdom and knowledge, all the the 30 or 40 seasons that the senior generation has that they can use to help the younger generation. So the real key is having a good, I don't know, a good dance, an effective way to share that. In fact, let me just share one other slide on this point real quick. Let me get through this. Can you see this slide with the triangle
Yes, sir.
on it? If you think about a good transition, and what I'm talking about is, I mean, you got to have a good process in place that we're communicating and we're talking about the plan. And if you have that, then this conversation about what are the terms of this transition, the timing, the money, the roles, and the authority in that balance or that dance between process and substance, you have this wonderful opportunity to educate and share the lessons from the senior generation to the younger generation about, hey, this is this is what we're encountering at this point in the, you know, 2026 or 2027. And that reminds me of these years, 1980, whatever, maybe, or not, or 1990 something, or 2012, or whatever those major years were. And here's how we made it through that time.
Hmm.
Here's what we learned. Here are the lessons from that opportunity. Um, and if we think about how to combine in a good transition planning process this sharing of wisdom from one generation to the next, we have a wonderful opportunity to educate that in-law, that spouse who's maybe married in but hasn't gone through what the family's gone through, but gives them a chance to understand those stories, understand those lessons, and even maybe kind of turn them into a little bit of a case study in some regards. So I don't know if that makes sense, but that's kind of how I'm thinking about that.
No, I think that makes a lot of sense. Looking at the clock now, I think we got some, maybe we'll hit a couple of rapid fire things. I think that's a pretty
Sure.
good grounding. Jack asked, like, the headwind of stepped up basis that exists, like no one wants to sell and pay capital gains. So therefore waiting until death and stepped up basis and like where that fits. When we think about what we were saying, not rebuying an operation, like where does it like how does this all fit together? And how do you got to think about the kind of the tax and the tangible there?
Yeah. So the stepped up basis thing, I think at times people get hung up on that when the reality is we're probably not going to sell that ground anyway. And if we do sell it, we're going to like kind exchange it. So that stepped up basis thing gets held out there as a reason not to do something. And I often say, look, first of all, are we really going to be sellers of ground? And even if we are sellers of ground, we're going to exchange that into something. So don't let the step up in basis get in the way of doing the right thing from a family business growth perspective. It's just like, if we're going to gift some of that ground to the next generation from an estate planning perspective, well, we're missing the step up in basis. Well, the reality of it is, with a pipeline of people coming behind us and our passion for farming as a family, we're going to be in the land business in some form or fashion for the next 50, 70, 100 years. Now, we may not always have an active farm at that time, but I mean, are we really going to sell all this ground and what are we going to do with all that money? So, and we're going to build this ethic of stewardship into the family and keep that ground so that the step up and basis thing sort of becomes a point that distracts people. But for most families I see and work with, hey, we're in it for the long haul. I mean, I know that's what you're looking for. A lot of families that we know are looking for that. The stepped up and basis thing is not. And what's interesting is even if you do the planning and say, okay, we're going to forego the stepped up and basis to do the right answer for the long-term health and growth of the family, there may be some unique things to do still to catch step up on a few. I mean, if you, instead of saying step up and basis guides our overall perspective, say no, transitioning the farm successfully and keeping it going guides our overall. And let's see how the step up in basis affects little strategies we might offer around certain pieces of ground or things like that. Not let that be the driver, but let that be a supplement to the strategy. The big strategy is, hey, we're going to keep it going. Even if we're not in the farming business, we're going to be in the land ownership business because we love that asset, and that is a way to continue this family dynamic we have around being in business together. It'll just be a different kind of business.
Hmm. There's a quick follow up on that. If the next generation might otherwise want to buy from the parents but feel like they can't because of stepped up, how do you make it to make sense to sell, just pay the capital gains tax? I mean, I think it sounds like your kind of view on that is like just use all the other tools in the toolkit if you have that long term.
Yeah, I mean, I guess and you and I were talking a little bit about this before we started, but trading capital inside of an agricultural family business feels to me very inefficient. Like we should be using that capital to go grow the farm or shore up the farm or whatever kind of on the outside. But trading capital between parents and kids, now sometimes that's necessary, and there is a part of that that is actually helpful for the kids having to pay debt and buy something back to our conversation earlier. But by and large, if we can instead use family cap wherever that capital exists in the family, if we can use that capital to go buy or take on new opportunities for the family instead of trading the dollars inside, I find that more effective for growing the
Yeah,
family.
I couldn't agree more, especially if you're in highly competitive environments, you want to capture that
Yeah.
value. It's like go do the next one, and maybe that's you do it together in a new land holding entity or whatever that fits like to the benefit of maybe another sibling if that's the concern of what
Yeah.
you're trying to
Yeah.
buy.
Yeah.
Um,
And Ben, I just want to say back to step up that so many times in ag, because there are such good tax opportunities to either delay or avoid some tax or whatnot, we sometimes let that tax tail wag the dog. I mean, you see it on equipment purchases all the time. And just like first think about what's the right answer for the business here. And then secondarily, is there a tax strategy that makes that decision more palatable or more effective or more efficient or the timing of it different? But when the tax tail, hey, we're not going to transition because we want to avoid missing we want to miss the step up in basis thing. So we're just going to let everybody die with these assets so we get a step up when we really didn't ever plan to sell the ground anyway. So like we let the tax tail drive it and we shouldn't have.
my big soapbox that's related to it is the ability. So depending on how if you have land and operating separate, and you have a land entity that is going to be highly secure even after death to support the operating entity and where that goes, and the control on that is very very clear, even if the financial benefits are spread more broadly to multiple siblings and where it fits. The ability to use that as collateral in key times within certain limits is often one of the biggest advantages that we see in farm transition, just financially, to take advantage of some of these big opportunities.
Yeah,
So
for
it's
sure.
not just assets and assets control, it's the ability to lend against them.
Yeah, and the family having a guiding principle around what is our acceptable parameter
Yeah.
around that. And like I have one family, this was years ago, but they used to say, and this was pasture ground that they were referring to. So it was way back in the day. They said if we don't have $25 of debt on every acre, again, this was grassland, we're not being effective stewards of our capital. So they'd get down to 21, 20, and then go right back, they'd go buy another piece of ground to get. They just felt like that was for them, that was the optimal level of the use of leverage to keep growing the operation from a ranching perspective. So
We had another question. What are your thoughts on family offices and how could they possibly apply in family farm transitions?
um, so I have a number of ag family businesses that are becoming more like family offices as they climb to that institutional or enduring level of business. So there's that aspect of it, which is to say that as a family, and it's back to that distinction I made about a family business versus an enterprising family. When a family says, are we a farm? Are we always going to be a farm? Or if they say, look, we are going to be a family in business together, and we can be in lots of different kinds of businesses together, or we can be in farms in different locations together. It doesn't have to be North Dakota. We can have something in North Dakota, and we can have something in the Corn Belt, or we can have something up there, and we can have something in Texas, or whatever it might be. When the family thinks about being an enterprising family, that starts to approach the family office sort of operational side. Now, there's also family office from are they a source of capital for
Yeah.
us? And from that perspective, what I like about that is what got that family office where they are today is some version of what we are going through in agriculture
Hmm.
as we're climbing that ladder. So the family office really represents an institutional business at some level or family that got to that level that said, we're going to keep this capital together, but we're going to deploy it in lots of different ways. And we can learn a lot in agriculture from hanging out with those families because they have figured out how to say the value of keeping this snowball going and getting it bigger and learning how to govern it and learning how to invest it and learning how to make decisions about it. Like that is something that a lot of family businesses would benefit for. So, in addition to the capital benefit of family office, really the question is, can we get that family office to come sit with us or go sit with them or be in our peer group or whatever? Because the chance to learn from them really is pretty rich for our family business.
Yeah, no, I think that resonates. We have a couple of farms that we work with where there isn't a next generation, and they're thinking about how do we do the appropriate wealth, the kind of the wealth planning for how they want their wealth to be stewarded going forward, but wanting to see the farm be successful with
Yeah.
either a neighbor or an employee. And it's been pretty cool to see where all that fits. And to answer Jack's question on a family office, the term family office, if you can define it, I will pay a lot of money because there are about a million different uses. How would you define it, Lance? As like a general catch-all that I'm sure somebody would disagree with somewhere.
Yeah, yeah, yeah. I mean, I look at family office just like the family has decided to keep capital together, and now they're doing different things with that capital. And inside that family office, there's all kinds of flavors of what that looks like. There's multi-family offices and single family offices, and all kinds of things. But it's really a family.
Professional management layer
Yeah,
to
it's
that exists.
professional management
Yeah.
with a family that has chosen to keep their capital together.
Yeah. So let's like when we step back kind of on this conversation, a couple of things that I heard is like start with the vision and no, don't just stop at the vision of like where we want to be, but what are the assumptions that it takes to get there?
Yeah,
And that,
first next steps. What's the next?
yep.
If this is
Oh,
really
yep.
our vision, what is the next step to get there, and how do we take it? And that's a very practical. In fact, our team at Pinion that does family business consulting, one of the things we pride ourselves in is saying, okay, what's the practical thing we have to do to get there? And that only comes from knowing agriculture and knowing what some of the practical steps might be.
And my personal nudge on that is, then put that into practice of like, what does that look like over 3 years and 5 years from the big decisions you need to make? In our case, we often see it in capital. It might be management. It might be strategic hires and where that fits. And is the action actually matching the vision and the
Right.
plan on where that goes?
And guess what, Ben? That is a succession plan. We don't
Yeah.
think about that as being a succession plan, but that, talk about family office being a nebulous term. Succession plan is equally as nebulous. Like, what do we mean by that? Some people mean estate planning, some people mean life insurance. But what I would say is a succession plan is one in which people have psychological ownership of where this farm is going over time and the role that they're going to play in it. And part of that is how we think about capital and how we think about land ownership. And that is just an integral part of the succession plan as anything you do with your accountant or attorney.
And I think bringing in that planning with also a little reflection backwards. I love your example of like, hey, what were some of the other, like, what does this cycle kind of look and feel like? What did we learn from those? What are the big transitions that we went through? Because I think like those learnings, especially with the next gen that might be a little bit younger, but frankly, even if it's they've already taken it through and having that like that structured reflective session, that feels pretty darn powerful. Those were kind
And,
of my
and
biggest. Go ahead.
yeah, and I would just add to that and say, if you're a senior generation member listening to this, go work on those lessons. One of the
Mm.
things we know about succession planning is it's not just about figuring out what you're going to do next as a senior generation member, but that by looking backward and understanding the chapters of your life, you're able to more clearly write the next chapter of your life. So it's a little counterintuitive, but this idea that writing down those lessons or talking about those lessons actually helps the senior generation take the next step in their succession journey because now they see the path that they've been on. And it's once you see that path, as Job said, once you look back and connect those dots, you can't see those dots looking forward. You can only see them looking backward. So look back, connect the dots, and it will be clearer what your next step on your succession journey needs to be.
So I want you to think about what your last big takeaway is. I think mine while you're kind of thinking and then you bring us home on here is just the for those farms that say they want to have that legacy is just being realistic about what it'll take for that farm to be successful in 10 years.
Yeah.
And whether that's a capability or often it's the level of support they need to have. And just knowing that, most family relationships that end up breaking is because of misaligned expectations and not delivering on those expectations and where they fit. And so just being really honest, like, is the farm actually going to be able to support what you think it will and to have the legacy that you say you want it to? And are
Yeah.
the actions actually supporting that, whether it's using land as collateral, helping to go buy new ground, or everyone aligning and saying maybe your vision isn't mine, and maybe we do want this thing to eventually wind down. Which again,
Yeah.
I have
Yeah.
full respect for that.
Right. Which gets to I think my takeaway. It just becomes so important for what you're doing at Fractal, for what I'm thinking about is just as a family, what does success look like?
Yep.
Both from a business standpoint and from a family relationship standpoint. Because if we do take on the next opportunity, but the consequence of that is we're at each other's throats from a family perspective, it may not be worth it. On the other hand, if we don't take that next opportunity and we're tripping over each other in the family business, like I've heard people say, look, part of why we have to grow is to keep people here and to keep
Yep.
people coming back here. So it's not just, is it an economic sort of equation around farming more acres? It's like if we want to have a thriving family business, we have to keep growing and we have to keep pushing ourselves and we have to be out of our comfort zone. And that means taking on the next opportunity. Even if it's not exactly perfect, we may have to trade that opportunity for another one again down the road, but the key to successful family business may in fact be growing so that people can come back and be part of something cool.
Humans like to build things, and building things that matter for a family, for community, long-term legacy and
Exactly.
stewardship. That's the game.
For sure.
Lance, I really appreciate you taking the time. Is it okay? We'll share your contact info with the people who are on here.
Absolutely.
That's
Yeah.
okay.
Yeah. Yeah.
And if you guys have any follow-up questions, shoot it to Lance, shoot it to us. We'll share it with him. But really appreciate everyone taking the time on a morning as folks are probably a little less itchy with the weather in the Midwest right now to get into planners, but I know that's coming soon. But yeah, thanks again, Lance. This
Yeah.
was
Thanks for the
a fun
opportunity. It was
hour.
fun. Fun to connect with you.
Likewise.
Okay.
Thanks, everyone.
See ya.